Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And if you haven't already, smash up the like with the subscribe and bell notification icon. Don't worry, if you want to see what the value is in today's video before clicking those buttons, I'll give you a quick reminder throughout the video as well. All right, today's video with our big titles of bear market rally, flipping bullish. Let's look specifically at Bitcoin and the S&P 500 to give us those leading indicators for when these markets can flip from their bearish sentiment to the bullish sentiment. Now here at the other side of this keyboard already, you're getting ready to say, you've forgotten about the macro stuff. Bitcoin has to go to 10K. This is way too early, blah, blah, blah. Yes, definitely. I hear you. And it can be too early, which is why we're looking at signals for the flip. We're looking for some leading signals on the macro chart to give us an indication of the market flipping from the bears to the bulls. Now, we are at significant lows already on the S&P. We've hit that October low. Potentially, this is the low. Potentially, it's the final low. Yes, can be too early, I hear, but we've talked about this on the channel for months and months and months, looking all the way back to earlier this year where we're looking for prices to decline and looking for a low around Q3, Q4, potentially late Q2. And so far for Bitcoin, we've seen a low in late Q2. That was the June low. And we've also seen on the futures market for Bitcoin a low in October as well. So basically, we've got those two lows there. The S&P 500 also has the significant low here on October. And as we're pretty much aware, the crypto market is very much tracking the S&P. So let's look at these levels and where these flips can happen. Also looking at some significant price ranges along with price ranges that we're looking for an overbalance for the market to then also give us that flip signal. Now, I wanted to let you guys know before the price increases that the price is increasing on the Investor Accelerator. So if you want to join us with the membership and the ton of courses that we have here with the Gann swing indicator to learn how to use Gann analysis. It is by far the best one you're going to get on the internet. And the same deal with the Wyckoff volume accelerator to learn and understand how to use Wyckoff analysis in your own trading and investing. Then this is the best time to be getting a TIA membership as the price will increase, and there's going to be a restructure of how everything is being put together here. If you're a current member, don't worry, you've already got everything, and provided you remain a member, you'll remain at that lower price as well. Now with these courses, it's not just the standard here's a trend line, what does this candle mean, the very, very beginner stuff. This goes into far more detail with explaining how you can set up a particular trading and investing plan. So basically putting it all together so that you can use it and make money from the market. It's not just here are lines, this is what they mean, copy and paste from investopedia.com. This is in far, far, far more detail. And there is lots of content here along with our Discord community as well. There's tons of stuff to go through here with members talking about how to take trades, how to implement your plans. And there's a lot of reviews as well from guys. Even just recently, there's a couple here that I posted on my Instagram as well. Some of these replies and with how people have used the content is that they're saying it's far more valuable than their university degrees. They've been able to make the course how much it cost them back very, very quickly and are now on their way to getting to their financial freedom or their other goals here in terms of, paying off their house or even just getting a deposit for real estate, which is something that we also cover here. And there's tons of reviews. And yes, I have gone on about it a lot at the beginning of the video. If you don't like it, obviously you can skip ahead. But this has been very, very valuable to a lot of people, especially while we're at the Bitcoin bottoms and the stock market bottoms, where you can give yourself a lot more time to invest in your education. So the prices are going up. Link is in the top of the video description at the lower price right now. All right, with the shill out of the way for our education, which I know is extremely valuable. It's something that I've used over the last 16 years. Let's get on with Bitcoin and the stock markets. Now, the stock market has hit this bottom here at 3,500 points. This was our macro level using our Gann 50% tool from the pandemic low to the 2022 top. So far, so good. Nothing out of the ordinary. This is a balanced move to the downside. Yes, things are different. There's different things being talked about in the news. But the way we see it is, it's basically, if it's in the news, it's been priced in. Everyone already knows what's going on there. And yes, we'll probably have some CPI data, more of this, that, the other coming out in like we always have every other month. Interest rates may go up. But remember what we just saw at the previous interest rate hike, the previous CPI data announcement. It had a spike down and then a spike back up, meaning that the data was not looking so good when it was released with the actual against the forecast, but the market saw it as good in the end, and the market's now bounced from that point. And it's actually come back and closed the price gap here. So this was a short signal. You can see this yellow box. Basically, this just means that the price of the market had basically jumped an area here. So this is 3,700 points up to about 3,720. And then on the way down, it dropped back through it and made another gap in the market, which this is then called an island reversal, which is a short signal. And to the downside, some pretty good gains could be made from that area, anything up to about that 5%. But of course, this would be for leverage traders. So, whatever leverage you got on there, that's the sort of profit that you're making at this point. Now, this has come back and closed the gap. And so we look at that across the market here. The gap has now been closed. So this signal is off. Obviously, the shorts are done for this particular area. This move to the upside is now starting to overbalance the previous move to the upside, which in fact was 221 points and basically 5 days. And so what we're currently seeing in terms of points, we're at 271. So we're overbalanced in terms of price, but not yet in time. It's basically on the money right now. If we have another day or two, then we're overbalanced in time as well as price, meaning there's more days up than the previous move and then more price up, which all that's saying to us is that there are more buyers now than sellers. That's what we want to know so that we can then make a decision on our own trading and investing. So this is on a shorter term time frame here on the daily, and then you want to start to see it happen on the weekly and the monthly, and then those cogs start to turn from the small cogs to the bigger cogs and the larger cogs, which then push you into a bull market. So for those larger cogs, we want to see another time and price figure come in. And so I've got here 688 points from the low to the high. We have 60 days, low to the high. So we want to see over 688 points and over 60 days. So I've got 61 days here. So where does that put us in the market if the October 13th low is the low? So we run it up to 688 points, somewhere out at about 4,180 points. So call it 4,200 points for a round number. And in terms of the days, let's go for around 61, 62. It's going to be about mid-December. So we're currently just past mid-October. We've probably got another, we call it, say, 7 or so weeks to go to get to that point. And should we see that rise and break and hold above the 50% level, which comes out very, very nicely with the 50% and the bear market downtrend, that is another key signal for the bears flipping into bulls. We recently saw that when we were measuring this move to the upside from June to the peak in August, and it was the largest run to the upside that had occurred throughout the entire bear market. And I was saying at the time, if you remember from the videos back here in August and September that we had the move up, even if we drop a little bit further under, which we have done, then we are in the process of forming a bottoming pattern. Of course, I always stand corrected. I could be completely wrong. The market just drops out and we fall below that 3,200, try to come back and test 2,700. This is going to take a lot longer. But for now, while we hold up 3,500 points and start to test these upper ranges here by putting in higher ranges of price and eventually time, then it just sets us up for a better move for consolidation to test some of these higher prices and eventually work our way back to previous higher levels, which of course, looking at this for the S&P, flows over into things like Bitcoin and the rest of the cryptocurrency space. We've maintained that this is probably the low period, and in terms of the bottoming process, it can take months. It is most likely going to take several more months now that we've been down for nearly 12 months. Remember, this peak is in January. We're now October, so we're getting close to 12 months into a bear market, which is basically a very good balancing point from where we came from the low to the top. It's basically just a nice looking balance correction before we head up again. And I maintain that this entire time looking for the low. Looks like we're there. Let's take a quick look at the Nasdaq. Very similar picture here as well. In terms of the bearishness to the bull flip, again, same sort of thing around 11,800 to about 12,000 points for this shorter term range before we can get above the bear market downtrend. The 50% level is 11,800. And for the current move, should the 13th of October low remain, then the 50% is at 13,600, which comes in very nicely with a double top in August. And of course, that's going to most likely show some sort of resistance if the market starts to pull back and then break away higher. Huge key on the macro. So it's going to look something like this, a little bit of a pullback. And if it was to break, that's going to be absolutely very, very bullish. And you're going to be able to see that before it gets back to the tops. Now, it could hit this resistance, come all the way back and test some higher, these lower prices here. But anything that's above this particular low, should this be the low, yes, I can always be wrong. I know that. And we just got to work with the market as it progresses. If that's the case, we remain higher here, get a higher low, we get a nice forming head and shoulders, inverse head and shoulders here. It all starts to work out to the upside as well. So we want to see where this move to the upside comes, where the rejection comes. Is that going to be a higher low? Very, very nice signal, and we start to get that move higher. That's going to be very, very bullish for the markets, even though it's going to be seeming in the market sentiment, the news, the headlines, everything will still be very, very bearish at that point in time. Now, the DXY, so the Dixie, I know you guys love hearing it called that. This is the US dollar. Now, we're on a monthly chart, a macro view here. We have been pushing up. The news has been crazy about the US dollar over the last couple of weeks, but we haven't heard as much from it lately, even though the prices are pretty similar to where they were just 3 weeks ago. So this was the bar here on the 23rd of September as the market really started to climb to new highs. Everyone going crazy. The British pound dumping, the euro dumping, that was at the peak here. And then we get the pullback. And I put up a couple of videos talking about collapse. Here we go again in the US dollar, the US dollar falling from that point, collapsing US dollar, et cetera, et cetera. Everyone said it's too early. Sure. Yes, in the macro sense, still slightly too early. However, from the daily, we were spot on because the news gives you so many clues that it's just going to happen time and time again. It's the same old thing. Everyone getting super excited, everyone talking about it, is thinking that the world's going to collapse because the US dollar is just pulling all the money from the pound and the euro. And then you see that, this was the most extreme panic, and the British pound is now up at these points. The euro not having as strong of a time as the pound. However, it's also put the bottom in around those levels as well. And if we go back to the US dollar, if we start to see this breakdown, it's still too early on the macro, but in terms of the daily, we've just got a lower high now, and it's broken down from the 50%. So the key level here for this to flip bearish, because we want to see the bullishness in the commodities and the stock market, is a breakdown of around 109. So that's the level underneath the previous low before it pumped up. It's the previous top here at about 109.29. And we start to get that breakdown underneath this 50% level. We're probably going to be at these levels, testing the lower levels sooner rather than later. Now, of course, these topping patterns and periods for things like the US dollar and more major economies like this, they can take a lot longer to play out. We've noted in the past that the previous top for the US dollar here, that's been 455 days. The market really didn't go anywhere in that 1.5 or so years. It just remained at around 118, ranged between 111 and about 120. And so if that is to happen again, then we could see it just remain up here for a couple of years while everything starts to readjust to a new pricing. And then maybe the US dollar collapses from that point. This was several years on the way down as the stock markets went up. So 2002 into the peak there. So the peak was around 2007. And then the US dollar had that final little collapse before it started to regain some strength. Long, long, long way off. But the daily, yes, we got that pretty much spot on there. Leading me into Bitcoin. So now that we've covered the stock market, looking at what potentially can happen there, the dollar, how that can affect Bitcoin, and obviously, we looked at the stock market. If that is the bottom and we're starting to climb up, then everyone starts to get a little bit more risk on. The Bitcoin chart here, looking for the flips. So we've covered a lot on the daily lately, but we want to look at the macro side of things here. And for the upside, if we're about to get a little bit of a bump on here for Bitcoin to test some higher prices, we want to see for the bears to go into bulls, a break above, of course, the bear market downtrend on the log. So it's the log scale. We've done it on the linear scale here. We talked about that on the channel. We broke above, sat above it here, and now we're trying to get back above it. But I've got this on a monthly chart to look at some of the key levels of resistance above the market right now. And so the first level is all in this yellow box here. It's going to be very, very tricky until it does get above 36,500. And I've got my other Wyckoff levels here. There is a lot of resistance on the way up, but provided we see the market come up and test these levels and put in higher lows, that's still a bullish sign. So there is going to be a lot of tests, a lot of times of is it bear, is it bull? That's just what happens. It happens every single cycle, especially when you get a huge breakdown. Same thing happened here. We had a pump up. Is this it? We're on? No, we're not. Are we on? No, we're not. Are we on? No, we're not. And that was over the course of 2.5 years. That is going to happen again. And you're just going to have to get used to it. There's no confirmation until, from what I see, a nice clean break above the 50% level where we can really say we're in the bull territory. And then finally, the level that it put in that final top before it dumped, so that final lower swing top, which was at around 48K. However, the closer numbers here, we're looking for the bear market downtrend. That's at around 25,200, which was the previous monthly swing top. Again, this is macro. This will take months. To the next level is the bull market correction low. So that's the May-June low of around 29,000. And then we start to play with the previous bear market levels. And that was the dump in January, 33K. We have the 50% level at 36,400 and then the top at 48K. And so I know that there's not that much. It's kind of annoying, yes, but this is the data that the market gives us. What you want to see is it testing the resistance levels and then forming higher lows. And that's what happens every other time. You get a test. We had the previous low here. You got a higher low. Yes, we got the flash crash. However, the signal there is look at where the market closed, very, very close to where that low was. This was a massive flash crash. We all know that. It was a huge flash crash, but we got a higher close. And looking at closes, it's the old saying is the amateurs control the open. So the amateurs dump the market. The professionals control the close. They pump the market. They bought it up. And then you had the next move up. You broke the previous top. You had a little pullback here before the market went absolutely wild. And again, took years, but they're the signals you want to see on the way up to let you know that, yes, this is a great buy the dip opportunity and not all the fear mongering that was happening here saying that Bitcoin should go lower. It will break $3,000. It will make it to $1,300. Some of the best names in the industry were talking about that back then. This is the signal that it's not going to happen, and it's a DCA move all the way up. There's a lot there that we've covered between the stock market, looking at the signals there on the macro scale here where the most money is in the markets, the Dixie as well, looking at where this is potentially coming in for some lows, and then of course relating that to Bitcoin and what's going on, where we could see some of those bearish flips. Now, this is all going to be the same on the shorter term timeframes. So make sure you are subscribed on the channel. There's your second reminder here at the end. Like the video if you found some value. And of course, hit the bell notification icon with all so you see it pop up on your home screens of your mobile phones. You can click straight on the video and do all the good stuff and check this out. And lastly, top of the video description, if you want to jump on with us with TIA Premium before the price increases, 30 plus hours. There's Discord communities, there's weekly live streams, Q&As. This is full of content to help you succeed in the markets, whether it's crypto, whether it's stocks, whether it's ETFs, whether it is real estate. This has got it all. It's a holistic course on how to trade and invest based on my 16 years and Michael's 12 plus years as well. So nearly a combined 30 years of experience within this course. Link is in the top of the video description. And lastly, shield to Twitter and Instagram. Guys, I'll see you at the next video. Thanks again for joining me on another jam-packed filled macro analysis look at Bitcoin and the stock markets. Hope you found some great value from it. Have a fantastic day. I'll see you at the next one. Peace out.